Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlin, the Chief Currency Analyst here with HYCM. I'm going to be taking us through in the next hour some of the recent market events, and we're going to be looking forward to see some of the opportunities that we've got coming up ahead. So I'm looking forward to this hour. I'm just going to wait a moment as folks are coming in, and as folks are coming into the webinar, just going to put up the disclaimer, which I do each week, just to make it clear that any trading setups, pairs that we're suggesting are not trading advice. This is not a signal service. So I'm not providing trading signals. The whole idea of the workshop is to help you guys sit over and watch over the shoulder of a professional trader to see how I go about making my decisions so that you can learn to make decisions for yourself. So the whole idea is meant to be a learning process. Now, just before we get going, if you can just let me know that you can hear me. Hi, Nadir, you beat me to it. I'm glad that I'm coming out over all okay. Hope you can hear me fine. Welcome, Aaron. Welcome, Yulia, Laden, Nadir, Sammy Van. Yeah, good to have you guys. Looking forward to this coming hour. As we get going, particularly for those who are new, I'll just briefly run over the session ahead. In the session ahead, I will be looking at a number of different topics, and if you go to your GoToWebinar control panel, what you will see is a handout tab. If you click on the little arrow by the handout tab, you should see a workshop guide that's entitled Workshop Guide May the 21st. If you just click on that guide, then what you should do is you should have this. And I designed this guide as a tool for you in your trading. I basically go through these 5 different titles every time I come to trade. This has become second nature for me now. I do it without even thinking about it. However, I thought it'd be helpful to have it as a piece of A4. So it fits on one page. You can just print it out, put it by the side of your trading desk, and you can use it as a helpful reminder for some of the most important things you should be looking at before you're trading. Again, you want to get out the habit of just trading technically, of just opening up the charts and you see that, you know, the euro-US dollar is at 1.1200. It's a big round number. It's a key support level. Oh, that must be a buy. Try to get into the habit of combining fundamental and technical reasons together for your trades. And then you'll suddenly find that over a period of time, you will grow in your confidence, you'll grow in your conviction, and your ability to hold and manage your trades. It takes time to develop this skill, but this sheet is designed to help you cover the major bases. So we'll be going through this sheet today. So if you've just joined the webinar, each and every workshop, we just go through this because the market conditions change, but our approach to the market stays the same. So it's consistent, it's dependable, we can repeat what we're doing over and over again. So that's the trading handout. Make sure you've got a copy, and we'll be referring to that during the course of the session. We also covering a special topic today, and it's something that's been in the news quite a bit. It's the election polls, and the reason I thought we'd cover this today was because of the election polls that came out of Australia. We had the Australian elections over the weekend, and it was a surprise result for the Liberal National Party. The polls have been putting the Labour Party ahead marginally in the polls for quite, almost 2 years. So when the result came out, it was a surprise. So we're going to be looking at how to use election polls in your trading. There's a very, there can be a helpful tool, and traders do make trading decisions on the election polls. And for those of you who don't know what an election poll is, it's simply how people are predicting people to vote. So we had election polls for the Brexit in the UK. and you know, election polls had that Britain would remain, and the polls ended up being wrong. Similarly, in Australia, the election polls had the Labour government, the Labour Party in Australia ahead. They turned out to be wrong. So how can we use election polls in our trading? And we'll be looking at that at the end of the session. The handout, you should already have that printed out. Make sure you've got that with you. And if you have any suggestions for future topics that you would like covering, please email me at giles.coughlin@hycm.com. That can be a very, very helpful for me, is if you just let me know, or a topic you want covering. It could be a technical area, it could be a fundamental area, it could be to do with applying fundamentals. You know, I'll consider anything really. So if there's something you really want to understand, and don't worry if you think, oh, this seems too easy or that's too simple. Don't worry, or even too complicated. If you just send me an email here, I can look into it and see what I can do. So if you'd like to turn to your handout, it should look like this. I'll keep it on the screen here for us for ease. And we're going to start, as we always start, by looking backwards. You know, you always have to see the context that the market is in, because what we're trying to identify as currency traders is really we're trying to identify unexpected change, because the best opportunities come when we have an unexpected change, when we see a divergence between price and either monetary policy or a political decision or, you know, some other market moving event. So the only way we really recognize that change, okay, you have the price can change itself, but by understanding the story that's going on behind the currency pairs helps us to recognize that change and to recognize which change is significant and which change is insignificant. So we're going to start by looking backwards, and we're always trying to summarize the sentiment that we're looking at. So we're going to read up on the last two sessions of market activity. We're going to identify the key market sentiment and summarize that sentiment in a sentence or two. Now today, there's one big narrative that's really been taking control of the markets recently, and that is the US-China trade war. So we're going to have a quick recap on that US-China trade war situation. We're going to help to start to identify why it's so important. And the reason the US-China trade war is so important is because of the concern over global growth. That is the big overriding concern, is that a trade war between US and China is going to drag down the whole global economy. That's why it's such a big deal. And we're just going to go through some of the history of the trade war. I'm going to share with you guys some resource so you can see, keep updated with the US-China trade war and recent developments yourself. I know that as a retail FX trader, one of the hard things can be, say you're working a day job, is you might be away from your desk, you're away from the markets for sort of 8-9 hours, and you maybe miss one little piece of information that's just come out and you've missed it. There's ways you can mitigate that by obviously reading session wraps and reading summaries of market sessions. But I'm also going to give you a tool for the US-China trade war to help you keep on top of that as well. It's something I came across in the week that I thought would be really helpful for you guys. So a brief recap of where we're at. Now, it was May the 10th of this month, 11 days ago, when United States increased their tariff from 10% to 25% on $200 billion worth of Chinese goods. President Trump threatened it from the start of that week, and then he brought it in on May the 10th. And it really was in response to President Trump saying China have backtracked on some of the agreements that they've been looking to arrange. He was disappointed with the way that China had written out some of the key clauses from the trade agreement that he was trying to agree with them. And as a result, this was his strike back by increasing the tariff from 10% to 25%. And when that was implemented, it was going to hit the markets in 4 to 6 weeks' time. because it didn't hit shipments up to a certain point. So it'll only really be felt in about 4 to 6 weeks. So about June 10th next month is when those tariffs will really start to be having an impact. Now, May the 13th, China announced retaliatory tariff hikes on US products worth $60 billion from June the 1st. So China is saying that we're hitting back and we're hiking tariffs on $60 billion worth of US products. They had a whole, tiering system. Certain products incurred more tariffs than other products, but that was the big picture. The total US tariffs applied solely to Chinese goods is now standing at $250 billion, and the total Chinese tariffs applied exclusively to US goods is $100 billion. So there's around $350 billion worth of goods that have tariffs applied to them from both China and the US. So the US-China trade war, just to put it into a bit of context, is if it breaks out fully, it could be the largest trade war in economic history. And I was reading on a little snippet of an article on Bloomberg today. They were reckoning that it could cost around 600 billion US dollars could be the total cost of a US-China trade war breaking out. So it's extremely significant. And let's just see, have I got that? Yeah, that's it. Just checking I have that tool for you guys. Yeah, I have got it. I'll be bringing that to you in a few slides' time. Okay, so in order to I've shown this slide a number of times, but for those guys of you who are new, it just helps to see. This is the world's total GDP, okay? And, $19.39 trillion of the world's GDP comes from the US, and $12.24 trillion comes from China. So between the US and China, you can see that globally, nearly 40% of the entire world's GDP that comes from the US and China combined. So now you can see why the China-US trade war is really a global growth concern, because both of these two countries have enough significance and enough power and clout to bring the whole world either up with them or down with them. And if China and the US are fighting, so many countries are associated with trading with both of these nations that it's going to be felt throughout the entire world. And that's what we've been seeing, particularly in Europe. We'll cover it during the session. We've been seeing this concern about European slowdown, that their exports to China are being hit. We've seen German manufacturing slowing. That's what's really been weighing on the euro, as well as like a slower Eurozone growth. And these two countries are bringing down sentiment across the whole world. So that's the background. That's what the market's focusing on. That's what's affecting US stocks, European stocks, Asian stocks are all being moved around on this overarching story. So when something happens to make the trade war worse between China and the US, we see stocks fall. When something happens to make it better, we see stocks rise. So recently, that's why we've just seen that when the Huawei ban was announced by President Trump, we saw tech stocks, particularly in the US, fall. And that's since been reversed or paused. There's a 90-day, I think, pause on that Huawei access ban. And then we saw a recovery in Chinese stocks overnight. And we've seen S&P 500 futures up 0.5% just before the markets opened. It's now up 0.67%. And we saw European stocks recover on the day. So the markets are being pushed and pulled depending on what this big story is. And just for some of you regular guys, just to help reinforce for you, if the US-China trade war takes a turn for the worse, what currencies are we likely to see appreciate in value? Just give you guys an opportunity to write in your questions. Which currencies do we see appreciate in value when the US-China trade war deteriorates, when that is worsens, when it sours, when an event triggers? What do we see strengthening? Yeah, that's right, Aaron. Yeah, well done, Sammy, and well done, Aaron. Okay, those guys have got the answer for us. Okay, so when a relationship between China and the US worsens, we see weakness in the Australian dollar, particularly because of Australia's relationship to China. About 30% of Australia's GDP comes from its trade with China. So what's bad for China is bad for Australia. What's good for China is good for Australia. We also see some strength in the Japanese yen and the Swiss franc. These two currencies are risk-off currencies. When the market is concerned about risk, it buys Japanese yen, Swiss franc, and US dollar. Yes, and you can, Sammy, see some weakness in the New Zealand dollar as well for similar reasons, being a neighbour of Australia, right? Now, so this US-China trade war, has been going on. It's intensified in the last 2 to 3 weeks. That's for sure. It's taken a bad turn. Everyone was hoping it was going to recover, but as I've shown this before, the mentions of trade war in Chinese language media has rocketed since mid-April. Okay, so with this, recent turn for the worse, the idea of a trade war has really increased within Chinese language media. And remember, China is it's not a Western country, so it doesn't have a democracy in the same way. It's a communist-led country. So a lot of their media is state-controlled, and it doesn't have the freedom of the press in the same way that you might have in the West. You can be a lot more critical, and there's a lot of nationalism that's just kind of within the fabric of being Chinese. So this trade war is, language in the social media really represents a nationwide move, and we see China moving towards nationalistic perspective as they really muscle down and dig down for a long trade war. So in my opinion, that this US-China trade war is set to get worse before it gets better, because the Chinese president, Xi, will want to show he's in charge. And if you think about China, this is China emerging as a more powerful nation. And it's about how does China as a more powerful nation interact in the West in particular. This is a lot what's going on. It's about East meets West. It's about a ideology. It's a communist state meeting a more secular, different democratic nations. How do they practice? How do they do their practices? Are they transparent, or are they using practices that wouldn't be, allowed in the West? And obviously, as China becomes more powerful, it's going to be expected to live to different standards than it was before. So this is a lot of the pressure that's going on. It's about the West wanting China to change. It's certainly about the US wanting China to change. And this is a lot of the antagonism that's going on. And China's emerging as a very powerful nation, doing very well economically. So there's a power struggle that's going on. So it's ideologically, it's economically based. So this is not something that solves quickly, is what I'm trying to say. I'm expecting it to get worse before it gets better. The one thing that you need to be aware of is that Donald Trump really doesn't like it when US stocks sink. He doesn't want to see US stocks fall. So a falling stock market, Donald Trump, he says that he judges how well he's doing by how well the US stock market is doing. So if the US stocks are rising, Trump considers himself doing a good job. If US stocks are falling, he thinks, oh, I've got to do something to change it. So that's why you see Donald Trump every now and then he sends out quite conciliatory messages. I'm sure that the deal will be successful. I'm sure we'll be able to work things out. So he's always be aware of this dynamic going on. It will help you to understand Trump's actions and why sometimes he's antagonistic and then immediately he comes in and reverses some of that antagonism. he's looking at the US stock market. Okay, so that helps you guys to be aware. As I said, sometimes, you know, being a retail trader, it's hard to keep track of all the news. So I'm going to send you now a link. I'm going to send it to everyone here. Now this link, I should have sent it to you over the questions panel. This link is a timeline on the US-China trade war. And what it does, it updates itself as it goes along. And I'll just show it to you briefly. It's worth having a look at. I'll just call it up here on my other screen. There we go. Yeah. And what you have a whole range of, from the very beginning of the US-China trade war, going right back to as far as 2016. You've got the beginning, and 2011, and then you've got a literal timeline of the first China-specific tariffs right back from 2018, and it goes right up to the present day. Okay, so right up, and it's updated as the trade war goes along. So you can just use that and keep an eye on that. So you can always check, or have I missed something? You can see what the latest is. So that's a little resource. It's quite helpful. Particularly as this is just, such a focus of the market. So I thought it's about time we had a really good look at it on our workshop, so that you guys are, really clued in. Okay, so that was, the background that I wanted to cover. Now, looking at the Asian session, overnight session, the key news that we got from the Asia was from the Reserve Bank of Australia. And for those of you who were on the FX week ahead yesterday on Monday, we covered this, and I told you my expectations that the Reserve Bank of Australia would be cutting interest rates and might be signaling that. Now, that's not. I haven't got a crystal ball. I can't see the future. However, it was quite obvious for those of us who've been following the RBA. A number of us have been here attending the workshop and the webinars. They've been signaling that if they see a slowdown in the labour data, they'll be more likely to cut rates. That happened, so it was very likely that they will be signalling some kind of a rate cut. We knew that they wanted just to keep things steady before the elections. So with the Australian elections out of the way, then there was nothing to get in the way of an RBA rate cut. And the minutes said from May the 7th said that interest rates cut would be appropriate if there's no further improvement in the labour market. So they're saying important to place close attention to jobs market over a period ahead. The last jobs data was a disappointment. It was something like plus 54,000, but a lot of those jobs were part-time jobs rather than full-time jobs, and the unemployment rate it clipped up to 5.2%, and then the prior unemployment rate was revised up to 5.1%. So that was a disappointment as a whole. They agreed a further drop in unemployment rate is consistent with inflation goal. Outlook will be less favourable without an easing in policy over the next 6 months. So they're recognising they want to ease. And the board recognised cut would have less impact than in the past, but would still put pressure on the Australian dollar and lower mortgage payments. So they recognise it could be helpful for the economy. And the first quarter inflation is noticeably lower than anticipated. And remember, in the bigger picture thing, the low inflation tends to mean lower interest rates. High inflation will mean higher interest rates to control that inflation. So when inflation is really depressed, it means that you're going to less likely to see an interest rate rise. GDP growth is supported by higher exports and new mining investment projects. Now, this is always a good habit. I'm going to send you another link here. This link is the RBA, the Reserve Bank of the RBA board minutes. So I'm sending that to you all now. Click on that and you can read the minutes for yourself. Well worth reading the RBA minutes. They had a good kind of rundown on the China-US global trade war and how it's impacting them and some of the wider impacts. So it's worth reading some of these minutes because you can get some information that you wouldn't otherwise get elsewhere. So just to highlight that as well. It's worth reading, not just for the country's monetary policy. You will also learn some extra things as well by doing it. Okay, then after the minutes, we also had the governor of the Reserve Bank of Australia, Philip Lowe, and now he said that the board would consider lowering rates at the June policy meeting. Okay, so that means a rate cut is now being priced in for June. So recent data makes it less likely that the labour market will surprise to the upside. That's consistent with what we've been saying and we've been seeing from Australia. So it needs further improvement in the labour market and for unemployment to decline below 5%. We know that it's clipped above 5%. Forecasts for growth and jobs would have been weaker without the assumption of rate cuts. Failure to resolve trade disputes is a major risk to global economy. That is the perspective I've been sharing with you between US and China. That's what he's referring to. So he's only limited inflation pressure across much of the economy. So really what Philip Lowe is saying is, we're going to consider lowering rates. The time is right. The employment data was the factor that was keeping us on hold. And with that employment labor data worsening, can't see that it's going to surprise to the upside. So a rate cut is on the board. And at the end of as the market was digesting this information, the index swap, the overnight index swap rate had a 70% chance now of a Australian rate cut in June. So the next meeting is June the 4th. So we're looking at a rate cut. So we're just going to look at some of the charts technically here. We'll just have a little look at Australian US dollar. So obviously you would have expected weakness in the Australian US dollar on this news, okay? So yesterday we saw that the Australian US dollar spiked up. This was spiking up on the surprise election results. The Liberal National Coalition government won in an unexpected move. But as we was doing the workshop at the time, I was saying I didn't expect this rally to continue because of the RBA meeting that was coming up. And we saw the RBA meeting, and we can see here, let's see, we can see the fall. The fall was here on Governor Lowe's comments here, just that fall there, a rate cut coming in June. So looking at trading this now, so how do you go about trading this? Now, if you've missed it, I wouldn't chase the price now. Instead, let's look at some technical places to enter, okay? So let's have some ideas from you guys. Where would be some good technical places to enter short on the Australian US dollar pair? We're likely to see more US dollar strength. So where would be good places technical places to start looking where to take a trade here? Okay. So tell you what, we'll go to the daily chart. Okay. We'll zoom out, we'll try and make this, we'll look for a swing trade. Let's look for a swing trade because we've got probably more downside in the Australian US dollar. Let's put a Fibonacci retracement level. Okay. So we'll go from the swing high to the swing low. Always draw your fib level from left to right. Let's put some support in here. Yeah, there we go. And then we've got, yeah, very good. So we got support here, here. This kind of level is a zone here, isn't it? So here, here, here. So somewhere between there and there, we've got a very nice support level there. We have, let's see. Yeah, Olufemi, 100 EMA. Yeah, the 100 EMA on the 1 hour chart, that would look very good for a potential short. That would be a good sell zone. That's the 23.6 level. So for an intraday trade, the 100 EMA on the 1 hour chart, that would make sense. We also have a pivot point just above 0.6900. So you've got a pivot point, you've got an intraday support level. So anything around here would be potentially good sell zone. And where would you put your stop, Olafemi, for an intraday trade? Where would you be looking at putting your stop? Let's see. He replies, okay, okay, obvious stop level will be above these two swings and above the 200 exponential moving average. So, you know, on an intraday basis, selling from this level makes a lot of sense here, and you'd be looking at taking profit down at the lows here, or certainly moving to break even or trailing your stop down, because this would be a potential area where you could see some buying interest. Looking at the daily chart, you know, this is a trade that I'm looking to get into. It's a longer term swing trade, and I'm looking at a return to this kind of level up here. Okay, so I'm looking at roughly the 0.7, the 0.700 is a big round number. We've got the 61.8% Fibonacci retracement level. We have the support level. So all of that comes round at that really key level of 0.700, and just underneath it, 0.6950, you actually have a daily support level, support 1 level. So that might be, I'll show you a lower entry, which I'm also considering. So looking at the Australian dollar, US dollar pair, you've got that 0.6950 level. You see you've got that pivot point there on the S1. So a return up to this level and a trading back down to that support level is another trade that I'm looking at there on the Australian US dollar pair. So that is what I'm looking at, and that's you know, what's on my horizon. So intraday, just got that return up to that 100 exponential moving average pivot point. Going on a swing trade, we have a return either up to the 0.6950, which is roughly the 38.250% fib retracement level of that last swing down, and going all the way up to the 0.700 level. And then I'm looking for stops to be above 0.7100, above the 100 exponential moving average, if we get up to that 0.700 level, so about 100-point stop. That's roughly what I'm looking at as this dynamic changes with the Australian dollar. Now, during the European session, we had OECD, the Organization for Economic Cooperation and Development. They cut global growth to 3.2% from 3.3% in March. Now, not a major downgrade, but again, it's significant because what the market is trying to anticipate is, will there be a slowdown in global growth? They're saying there's a slight slowdown from 3.2% to from 3.3% to 3.2%. So we are seeing that slowdown. We also saw coming out during the European session some nationalistic pieces from China. This was from Chinese state media, from their news site. They said, facing an aggressive US protectionist stance, China has demonstrated full readiness to fight back by announcing tariff countermeasures. China has reiterated that necessary counterstrikes will be rolled out if the United States continued to act willfully. Make no mistake, China is not bluffing. So what we're seeing now is we're seeing China really digging in for retaliation and for standing up to the US trade tariffs. So just bear in mind, I'm expecting this to get worse before it gets better. So we're looking at weakness in the, well, we're looking at strength in the yen, strength in the Swiss franc, and potential strength in the US dollar if this continues to play out, and obviously weakness in the Australian dollar. So in this kind of environment, the currency pair that is really sensitive to this is the Australian Japanese yen pair. So they obviously kind of move in opposite directions. So when it's a risk-off environment, we see the Australian Japanese yen fall. When it's risk-on, we see Australian Japanese yen rise. So in this current environment, always have a look at the Australian Japanese yen, which is a great pair to trade as a kind of risk proxy pair. So when we're concerned about risk, look at the Australian Japanese yen. It's a good pair to short. It tends to be very responsive to this. Okay, we're now going to look at Brexit. Now, Brexit is winding up again for more Brexit headlines. We've had a moment of pause as the Conservative and Labour parties attempted to agree cross-party talks. And while those talks have been going on, there haven't been a whole lot of Brexit headlines. End of last week, Friday, Labour leader Jeremy Corbyn basically said that the talks have failed. He didn't see any good in doing a deal with the Conservative coalition government because he said that that party was in disarray. So he's lost confidence with the process. However, Jeremy Corbyn is by nature a Remainer, so it hasn't been in his best interest to negotiate a deal that is suitable across both parties. So there's party politics that have played, and now there's going to be another vote on what's known as the Withdrawal Agreement Bill. Now this will happen the week commencing June the 3rd, and we'll be looking at some of that in a little bit of detail. This is the rough timeline, and this is the rough consequences. If it passes through Parliament, it'll obviously have it has its first reading, and then it'll have a second reading. And if there's any amendments, those amendments would have to be negotiated with the EU. Okay, if the EU refuses the amendments, we're back to no deal, and the other options. If it agrees, then we get the deal. So the only way we get a deal is if Theresa May's withdrawal agreement bill is passed either with amendments or just as it is. Now the likelihood of it passing is seen as very, very unlikely. It's not seen as likely at all. Okay, there seems to be very little chance of Theresa May's deal getting through. Theresa May will be stepping down as Prime Minister of the Conservative Party, and there will be a Conservative leadership contest that will take place over the summer, and there will be a new Prime Minister shortly. So this is probably going to be Theresa May's last action as a Prime Minister. And today she's been trying to gain support for what she's called a new and bold Brexit plan. The idea that there's going to be anything new or bold in this is quite unlikely. She's going to be making some announcements today as we finish this webinar at 3 o'clock GMT, at 3 o'clock British Summer Time, or I think it's 3 o'clock GMT time, so that'll be 4 o'clock British Summer Time. So anyway, either as this webinar finishes or the hour after, we're going to see Theresa May making some statements about this new plan. Okay, so this has been billed as being new and bold. The idea is not probably going to be that new or bold, but obviously traders will be eyeing it very carefully to see if there is something that is either new or bold that will mean it's more likely for the deal to either get through or Britain to remain within the EU in some form. So that's what currency traders will be looking at. I'm not going to go through all of this detail here because you're going to find out sooner or later. But the thing that I want to draw your attention to is simply that there is the European elections coming up over the weekend. So if Labour is squeezed and the Tories are squeezed, if both the Labour and the Conservative government are really hammered in the European elections, if they lose votes, then there may be a scenario where members of parliament get so worried that they back Theresa May's plan just to get Brexit done. There were some local elections in the last couple of weeks in the UK, and both the Conservative and the Labour parties lost a lot of council seats. And the reason was because of the way that Brexit had been handled. So there is a wearisomeness within the UK, and people are tired of Brexit not being sorted. So that's just one scenario to look for. that if the European elections come out very badly for the Conservative and Labour parties, they might just back Theresa May's plan almost out of desperation. So look for that dynamic. And also, the other dynamic that's really important is how another referendum vote will be. Because if it's possible for a referendum to be part of Theresa May's withdrawal agreement bill. So you see this bill that's going through. See, in order to get people to vote for her bill, she's having to make it attractive for people who want to remain within the European Union, because she hasn't got enough support. So she's got to change the bill to make it attractive to enough people. And one of the ways she can make it attractive is by allowing for a vote on another referendum within the UK. So one detail to watch is if it's, if it's just like dangling a carrot in front of their eyes saying, oh, maybe we can do a referendum, maybe we can't, then it won't get many votes. But if there seems to be a way for people to agree the withdrawal bill, which might mean Britain stays within the European Union, then she might get people who have rejected her bill vote for it in the past. So that's some of the detail to watch. I would suggest, getting a good analyst and reading up on, the website I work for, forexlive.com. We'll be covering it. So if you're unsure of that detail, and it is a bit fiddly, that detail, then you can look at it there on forexlive.com. I'll just send you the email for those of you who don't know, and you can follow the Brexit breaking headlines here. And that's only like a few minutes delay, so you'll get that pretty quick. Okay. Now, this is the calendar for Brexit leading up to October the 31st. So the current exit of Britain from the European Union is the 31st of October. So this is the European elections are going to be held in the UK. We're going to get the recess beginning, and Parliament returns on June the 4th. Okay, so that's when we get withdrawal agreement bill. We voted on in Commons this week. So sometimes this first week of June, we'll get the withdrawal agreement bill voted on. This is the withdrawal agreement bill here. So that process is what will be happening here on the 4th of June. Okay. Then the 1st of July is the last day UK could leave the EU before new members of European parliaments take their seats. Then we got the new European Parliament begins, and because Britain is still within the EU, we will, in a very strange course of events, be having our own MEPs. We will be having elections for British candidates in the European Parliament, and a lot of those seats will likely be won by people who want Britain to leave Britain. So it's really disastrous in terms of the political scene. Then there's the summer holidays. After the summer holidays, there's conference where we get the election of the new Tory leader, and then we get the current Brexit date for 31st of October. So that's the timeline of events. So you can see the withdrawal agreement bill is important, and if it doesn't get voted on, remember, if it's rejected, we go back to these scenarios: no deal Brexit, referendum, cancel Brexit, almost anything goes, if you notice on that bottom line. That's why the pound has been sold off so heavily recently. Let's just have a look at the pound US dollar pair. You can see the pound has just been sold off day after day for some days now, as the market's been digesting this news. Okay, it's selling, selling, selling. We have a little bit of short covering here now. You see, this is traders just realizing that Theresa May is about to come out and speak, and in case she says something that is really positive for the pound, people are closing their shorts. Okay, and that's why we're seeing some recovery there in the pound, and people will be looking at Theresa May's detail. So that's just that dynamic that's been going on. Okay. So a quick lesson for you guys. It's been a lot of learning today. Which currencies will move during risk-off times? We've already covered that. And Just to remind ourselves, when they risk off markets, we'll see the yen, the Swiss franc appreciate, and the US dollar, and see Australian dollar, New Zealand dollar, and Canadian dollar depreciate. We'll also see the Nikkei. I find the Nikkei is a very helpful gauge on risk, whether that's gained or lost. As we entered the European session, we saw that there was general US dollar strength across the board, and with the exception of the Canadian dollar, and Australian dollar is the weakest on the day. So as you guys know, one of the key things I always want to do is looking at the charts, always want to develop a bias for certain currencies. We can see that Australian dollar weakness, US dollar strength. So we can see that the currency pair to be looking at for trading for this session is the Australian US dollar currency pair. Okay, we got our fundamental reasons, a rate cut coming up in June the 4th, and we have US dollar strength as the market awaits the FOMC minutes that are coming up tomorrow at 7 o'clock GMT. So we've got a strong currency, we've got a weak currency. Looking at the end of sort of midway through the European session, just got the S&P. See, the S&P 500 from yesterday was down 0.67%. I'm just looking at my Bloomberg terminal now, and it's opened up, and we're up 0.62%. The S&P 500 futures, this is the futures market before the S&P 500 opens. This was plus 0.38% when I put this screenshot here. Actually, what am I doing? Let me just send the screenshot over of the current prices. That would make sense, wouldn't it? Let's just use I'll just bring it. Right, here we go. So get that. We'll get rid of that one. And we can see, okay. So we can see S&P 500 is up. S&P 500 is up. The VIX, the volatility index is down, which is good news. We had a sea of green across the European equities, all of them up. Overnight trading, we had the Nikkei was just marginally down, but we had the Shanghai index was up plus 1.23%. That was largely on the reversal or the pause of the Huawei ban that Trump had put into effect a few days ago. That was paused. So we saw some recovery in the Asian markets generally. Recovery in the Asian markets, which reversed a down day previously for the US markets, a recovery in the European sector, and now US stocks are up high. We've got Dow up 0.5%, Nasdaq up -4%. So there is a green relief that's coming in, and that's just simply on that latest slightly less dampening of the US-China trade issue. So that's what we've got. We've got slight risk. Risk is recovering slightly, but very sensitive. As I said, I'm not thinking that this is the end of risk at all. This is just a minor pullback on the risk sentiment that US-China trade war is still going on badly. Okay. Now looking forward. Okay. Now let's look for some key market moving events. Okay, is there any anticipated events coming up? Well, yes, there are. We've got the FOMC minutes on Wednesday. So for any dollar trading, you want to be aware that the Federal Reserve minutes will be coming out tomorrow at around 7 o'clock GMT. So that's risk for the US dollar. And we also see there's German manufacturing coming out on Wednesday. I'll just pull this out. Now this is one to watch, because this German, the German manufacturing really was one of the catalysts for setting off some euro weakness, and it's something that will be eyed again this week. Comes out on Thursday. I'll just take a screenshot so you can see. Yeah. Here we go. Right, Thursday we have it's the German flash German flash manufacturing PMI. What the concern has been is that with the slowdown in global growth between US and China, that's affecting German manufacturing. And Germany is the major country within the Euro bloc. So Germany's kind of seen as the bellwether for all of Europe. So if things are going well with Germany, because it's the largest country within the Eurozone, that lifts the whole region disproportionately just because of the size of it. So what we need to do is we need to have a good look at that manufacturing PMI. Anything above 50 is growth. Anything below 50 is contraction. So we've got these low numbers having come out. It might just be worth having a quick look at the. Yeah, I'll show you the graph so you can see the concern. Right, this has been the concern here. See, these are the last manufacturing PMI numbers. Okay. So you can see it was this last one here that sort of really dropped down to the 40s, which was a very low reading, multi-year lows. So the market we're looking is if we're looking for a recovery. If that drops even further, then we're most likely to see some euro weakness. So that is a big risk event for Thursday. Don't miss that German manufacturing. Potential, it is a potential opportunity there for trading. A very poor number will see some quick and for the next, you get a good few minutes of euro selling on a very weak number there, and obviously making sure that you've got the two releases there that you need to hold together. Okay, let me just show you what I mean. You've got the German manufacturing PMI, and then you've got the Eurozone flash manufacturing PMI. Okay, so hold those. If you get a big divergence between those two, that's not what you want to see them both moving in the same direction. So just be aware that from 8:30 to 9, there's another risk event at 9 a.m. GMT. So just make sure you hold those together, just like we did with the Reserve Bank of Australia. We had the minutes, and then we had Governor Philip Lowe speaking. So kind of see the two events as one event, or trade them as two separate events. But the key thing is don't miss that it's a two-event scenario. Okay. European elections on the weekend. Now, this is something to be aware of. A lot of the political focus has been on Britain and Brexit, but there's a number of Eurosceptical parties which are rising up within the Eurozone. And from a broader perspective, when will questions be asked about how successful the Eurozone is? You have the rise of a Eurosceptic party and that was elected in Italy. We obviously have UKIP and Brexit happening within the UK, and this has given some strength to Eurosceptic parties within the rest of the European Union. So if a lot of Eurosceptic members of parliament are elected to be in the European Parliament, this could really be very disruptive for the Eurozone as a whole, and very negative for the euro. So looking ahead, there's a lot of risk for the euro coming up. We've got the German PMIs, manufacturing PMIs, and we've got European elections on the weekend. So be very careful of holding the euro over the weekend. You basically don't want to hold the euro over the weekend because of the election risk that we have coming up. So that's just to be aware. Forewarned is forearmed, and we've covered all that, and that's just for Wednesday. Just got the FOMC data coming out on Wednesday. Looking at the charts, we've already seen that for today, the Australian US dollar pair is the weakest. But again, remember that the Australian dollar is very sensitive to US-China trade risk and disputes. So just be aware, though we're expecting more downside for the Australian dollar, there is a risk if there was a major reversal in the US-China trade development, then that would see some Australian dollar strength. Just to be aware of that and to keep it in your, in your memory banks, as it were. Look at your risk. Very briefly, we're looking about using election polls in your trading. Yeah, now you can trade an election poll. Let me give an example. In the Australian elections, when the let me just pull up a chart. I'll pull up the chart. I'll pull up the Australian, the ASX 200. Here we go. So this is the This is the Australian daily chart, the ASX 200. Yeah, this was yesterday. This was the strong bullish candle that just went straight to the pivot point and is moving up to that next pivot point at the R2 level. Now, the reason this increased so strongly is because going into the elections, it was thought that the Labour government were going to win. The Labour government in Australia had been saying that they were going to penalise banks by fining them and regulating them strictly. All of this was going to result in some, negative stock prices for the banks, Westpac, NAB, some of the big Australian banks. So when the Labour government didn't get voted in, a lot of those bank stocks, had multi-percent up days as traders were relieved, and obviously traders bought in to those rising bank stocks, and the ASX 200 just leapt up on the data. Very good, and that was the result of yesterday, and prices still rising today on some of the government relief that's been planned for Australia. There's been some tax cuts announced, etc. So all of this has been very good for Australian business. So because now how do we trade this? Well, what you could have done, you see, is if you were aware of this, if you're aware that in the polls that the Labour government were ahead, traders were preparing for a negative result for the day. So as soon as the poll was contradicted, traders were able to take the reverse position. Okay, so what polls do is polls show the expectations of what people are forecasting to happen, and so we can just use that in the same way we'd use any data point. Just like if we saw with the Reserve Bank of Australia, we've seen that they were focusing on employment data. And when the employment data came out weak, we knew that was going to be negative for the Australian dollar. We've been following that for a few weeks, few months. That's something we've been keep on referring to. You can use election polls in exactly the same way. Use the forecast to trade into the event, and then you trade out of the event depending on what actually happens. So look at the polls, and particularly when you're getting close to an event, the polls will switch and change. So you can actually trade the switch in those polls results. So if you get, for example, with the Australian election, if you suddenly have seen a switch from the Labour to the Liberal National Party, you would have suddenly seen a big move in the Australian dollar. You would have suddenly seen it appreciate. So the polls can be traded in a very similar way to the actual election result. So look out for the polls. Read up when you see an election coming up. Maybe use the European election as a trial. See what polls you can read, what people are expecting, and then you can begin to see how that impacts the different currencies. Particularly, anything, if there's a rise in Eurosceptic parties getting voted into the euro, we're going to see more euro weakness. Guys, that's coming to the end of our session. As always, I will let you know about the coaching that we do here at HYCM. For the following deposits to your accounts, you get the following offers: 1 hour coaching session with me, where I have a 1 hour and it's just one-to-one. So we can speak just like this, but obviously I can hear you as well. For $3,000, you get the 1 hour coaching session plus a follow-up review. That's very helpful. and the premium is exactly the same as the Essential and the Pro, but you get 2 hours coaching session. So I've got a cough here. And you get 1 week VIP support from myself. Guys, it's been a pleasure. I hope you've been able to learn some things from this webinar. Look out for the risk-off trading coming back. 27th of May. We'll have, now, the 27th of May, I won't be doing my normal week ahead. It's a bank holiday over here in the UK, and so I'll be off. But I will be back on the 28th for the workshop. So we'll have a look on the workshop on the 28th. We'll also have a look ahead as to what's coming up. So we'll try and cover them both on that one day. Thank you very much for attending. I hope you guys have a good week, and I look forward to seeing you in the future. Yeah, thanks, Nadir. Take care, guys. Yeah, cheers, Aaron. See you. Goodbye.